Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar at present is still struggling to try and climb out the bearish trenches since the rejection of the minor resistance of 70.65 3 days ago. Yesterday, the greenback strengthened after the US Federal Reserve kept interest rates on hold despite President Trump tweeting on Tuesday that it should reduce rates by 1% to help the US economy go up like a rocket. After the two-day meeting, the Fed board unanimously decided to keep rates on hold at a range between 2.25% and 2.5%. So as the US dollar remains under selling pressure against the rival of the US, the intraday low posted overnight was 69.94. It is assessed that the top side will be continued to be capped by around 70.65 to 71 cents. And still monitoring your stop losses according to your risk management, as I feel that market will look towards the level of the yearly call of 69.40 to 69.60. Later today, all eyes turn to the non-farm payrolls, which is at 10:30 tonight. So the dollar index, which measures the greenback strength against a basket of 6 major currencies, advances further for the second day in the wake of the Federal Reserve's latest rate signal. With the global markets now waiting for the Friday's job report, or non-farm payrolls, or the NFP, which tops the list of data releases for this week, economists have forecasted a gain of 181,000 jobs, with the previous release higher at 196,000 jobs. While the unemployment rate is expected to hold at 3.8% and the average hourly earnings looks to 0.3% forecast, with the previous at 0.1%. So with the euro rejecting recently at 112.55.65, as you can see here, still poses a further threat to the downside and the eyes look towards 110.70. But like the Australian dollar, I do suggest continuing to monitor your stop losses. Just in case we do get an unexpected number, could see a return instead, not to the downside, but back towards that level of 112.55.65, which at present is still seen as a supply zone. The dollar yen, since the long-legged doji, hasn't really staged any significant moves, and still at this stage, I believe, poses a threat from the technicals to the downside and looks towards the target of 110.70.80. Any advances should find resistance around 112 figure to 45. Well, the Bank of England kept interest rates on hold at 0.75%, although the Bank of England Governor Mark Carney did state that rate decision was somewhat, I felt, was to a hawkish tone after saying that there will be several rate cuts from the bank if Brexit is resolved and growth and inflation point higher. Although it is said that Mark Carney may step down at the end of the year, which would not be his decision, so very mixed there. Nevertheless, I don't have a view for the pound at the moment since the descending triangle broke through and crushed the level of 129.70.85. Although there is a little bit of a bear pattern coming through here, I would like further confirmation. So at present, I would like to just stick neutral for now and reassess as the market plays into today with the non-farm payrolls ahead. Gold plummets again back towards the lows seen in April of 1,265 to 66. Still seen as a demand zone from 55 to 65, we should not rule out that the market could test there, but could be seen as a buy from the 4-month lows. It is assessed that we are seeing a bit of a divergence here in the bull case, and therefore could easily see a rally from this region back towards 1,286 to 88. It is from that level that the market needs to break through 88 to reinstate the upside to at least 1,300 to 1,324. And wrapping up with oil, well, the market plummeted heavily overnight of over 3%. It is on the back of the fact that oversupply fears have increased, along with US sanctions on Iran and also political turmoil in Venezuela. Nevertheless, my target at this stage still holds towards $60 a barrel. It is assessed from there that buying or demand should emerge and see a rebound from the level of $60 a barrel and back up towards the region around 64 to 66. Well, that wraps up for this week. So thank you very much for joining me. But I would like to again mention that do keep an eye out tonight for the non-farm payrolls at 10:30. They will be a significant number if it's lower terms of movement in the markets. So keep an eye out for that. But for now, keep it out for the intraday report. And I hope you enjoyed the great start to this new weekend.